And speaking of, perhaps the biggest stock caught up in the crypto sell-off was Tesla, but importantly, it's not recovering quite to the same degree as some others, down 20% year to date. So how do you value a company not just with Bitcoin on the balance sheet, but also that's caught up in the same sort of fervor and belief about the future as so much of crypto is? Let's bring in Morgan Stanley's head of global autos, Adam Jonas. Adam, happy Thursday. My question, I guess, here is about sentiment and belief. There was a wariness around Tesla and Bitcoin, perhaps, which have been tangled up today lately with Elon's tweets. What's Tesla really moving based on now? Because the traditional fundamentals, I mean, it hasn't been moving on those for a long time, right?
John, remember the last time I was on with you, I showed you a chart. Don't make fun of my art skills, but here's another one, okay? The story of Bitcoin and Tesla is really, it's correlation, John. And there are rampant speculative elements to Tesla trading. There's just no denying it. Yes, Tesla is a change the world type of company, but that open-ended bull case and the non-disprovable, largest TAM in the world kind of thing in a post-COVID, post-war environment in some ways, where we're rebuilding the world, it attracts the same kind of rampant speculation that you might see in a Bitcoin. So for me, that's what you're seeing here. And for a long-term investor in Tesla, when I see Elon Musk tweet about the various crypto stuff, I mean, I think they must be cringing. Like, isn't this beneath you? If you just spent the time focused on the rockets and on the storage and the things that matter to humanity, maybe you wouldn't be adding unnecessarily to the rampant speculative part of what's really an incredible and historic fundamental story.
So, I mean, Elon Musk is a genius, so maybe he can focus on a bunch of things at the same time, Tesla, SpaceX, Bitcoin, Dogecoin even. But if you're a mere mortal and you want to focus on investments, how do you do that in this space? Where's a good entry point? How much do you worry about Tesla getting caught up in these other things as you consider where to take a position?
Yeah, I mean, I think that, and to add to what you just said, John, you then throw in the gamification of stock trading, right, within a broader retail audience than ever, and you have better statistics on that than I do, and the democratization of venture capital through the whole SPAC phenomenon, right, and you have this kind of you catalyze the herd mentality and the animal spirits, as you said on a previous program. So I would listen to JC, your man Jim Cramer, and what he's saying to try to create some awareness around the speculative nature. I guess the message to investors is, use your horizon to your advantage. Do you really have a venture mentality? Because you need it to ride out volatility and to place bets on companies that in some sectors, 9 out of 10, will never work. Now, we do believe that Tesla's achieved escape velocity. Clearly got overbought with all the momentum and the hype. The messages we have to our clients on Tesla is there's bear cases and bull cases at the same time. The bear cases we think are China, Apple, and overhyped autonomy. But there are some bull cases too. You tell me where you want to go from here.
Well, Adam, I want to broaden this out to the broader EV space because we have seen some of the names there bouncing back quite strongly over the last week or so. Last week, we spoke to the CEO of Lucid Motors, Peter Rawlinson. He wouldn't, or maybe he couldn't confirm the delivery targets for next year, the production targets, and he laid that out only a few months prior in terms of their SPAC presentation to investors. Is that something that should worry investors that are looking at or have gotten into that SPAC, or do you chalk it up to them being in the early innings and sort of these growth problems that you should expect from companies this early on?
Deirdre, without referring specifically to that SPAC, yes, it should worry people. We think that you should set an incredibly high bar of selection for these companies, many of which, and again, I'm not referring to the specific company you mentioned, but many of which, in our opinion, should not be publicly traded, but they are. And then many of which are run by management teams that should not be running publicly traded companies, but they are. And if you make it through the gauntlet of those two things, being worthy of being public and having a management team ready for prime time, D, now you're in a business that's just damn hard.